A stunning announcement from CVS today. The nation's second largest drugstore chain says it will stop selling cigarettes and all tobacco-related products in its nearly 8,000 U.S. stores starting in October. Is calling it quits and seeing big losses in sales a good decision? Bertha Coombs has that story.
For CVS Caremark, taking tobacco products off its shelves is a matter of strategy, as it vies to play a bigger role in healthcare through its pharmacies and prescription drug benefits business.
Tobacco products have no place in a setting where healthcare is delivered. And when we asked ourselves where we expect to be in the future as a healthcare company, it became clear that removing tobacco products from our stores is the right thing to do.
The company says it will lose $2 billion in annual sales, which will result in a 1.5% to 2% drop in 2014 profits. But analyst Ross Buchan thinks the move will be positive long term.
They're going on a large marketing plan for the cessation of cigarette smoking. I think that's going to create a lot of goodwill with the consumer and actually drive some traffic into the store.
CVS is the first drugstore chain to voluntarily stop selling tobacco, but pharmacy retailers have been under pressure to stop from healthcare groups including the American Cancer Society, the American Pharmacists Association, and socially responsible investors such as the Sisters of St. Francis, which has been pushing Walgreens to quit the habit.
CVS Caremark has positioned themselves as the leader, and that should put pressure on the other pharmacy chains, particularly Walgreens and Rite Aid.
Walgreens issued a statement saying it continues to evaluate cigarette sales. CVS's decision was years in the making. Former CEO Thomas Ryan talked about dropping tobacco in 2008. But as retail competitors like dollar stores have become bigger sellers of cigarettes, the move now may make more financial sense.
When you think today about the fact that people used to smoke in airplanes or that they used to smoke in restaurants, maybe this is the kind of decision that will change our industry in the future, and people will look back and think about it in a very different way.
Asked on social media about other products like e-cigarettes, CVS says it doesn't sell them and may revisit the issue depending on what the FDA determines about them. When it comes to sugary soft drinks and alcohol, it says unlike cigarettes, those can be consumed in moderation. Bertha Coombs, Nightly Business Report.
Of course, a lot of investors will be watching this closely because tobacco stocks are big defensive plays and they tend to pay rich dividends. Joining us to talk about it, Vivian Azer, who's the U.S. alcohol and tobacco analyst at Citi. Vivian, thanks for joining us tonight.
Thanks for having me on.
Obviously, competitors will be watching this carefully to see what impact this has on the sales at CVS. What do you think the impact is going to be?
Well, I'm not a retail analyst, but for the tobacco manufacturers, we don't expect any material impact. The total drugstore universe accounts for about 5% of U.S. cigarette volumes, so we don't expect that consumers will alter their consumption patterns. We think they'll just switch channels.
Mm-hmm. And so what does this mean for the tobacco companies and tobacco investments? Are they still a good investment for investors?
Yeah, absolutely. We are recommending Altria and Reynolds American. We think they're great defensive plays. While the exogenous headwinds persist in U.S. tobacco, this is not new news, or should not be new news, to longtime tobacco investors. Cigarette industry volumes have declined at an average 3% to 4% compound annual growth rate over the last 10 years, but cigarette consumption continues to be sticky. There are still 40 million adult tobacco users in the United States, which really supports a very healthy cash flow return profile for those companies.
But let me go back to my first question, really, and kind of re-ask it again. What is the likelihood that other chains will follow CVS and start to withhold sales of tobacco products? What impact does that have? I mean, could this be a domino effect eventually for these companies?
Well, 65% of the volume sales of U.S. tobacco products are made through convenience and gas channels. So while I can appreciate kind of the health implications and the messaging, that a retailer might want to consider, that's largely not applicable to the large universe of tobacco retailers.
Mm-hmm. Let's look at some of the stocks and how they performed today. They were all of them were pretty much down by 1% or more. And you say you like Reynolds and Altria. Tell us why.
Yeah, for my money, I'd like to avoid headline risk. And within my coverage universe, the third U.S. tobacco stock is Lorillard, hands down the best earnings growth story in the universe, but subject to a fair amount of menthol risk. And in particular, relative to the overhang that you saw on all the stocks today, I would mention that there was menthol news out of the FDA, and pending menthol regulation is something that is really top of mind for tobacco investors. So the move in the stocks I wouldn't fully attribute to the CVS news.
And we'd mentioned the last few years how dividend payers were darlings on Wall Street. A lot of people buy these because of the dividend. Are the dividends, in your view, secure for the tobacco companies?
Yes, they absolutely are. These earning models move very slowly. The drivers and kind of the nuances of the top line algorithm don't change all that much year to year, which makes it very easy for these companies to manage their cash flow.
So you were saying, Vivian, that these tobacco companies still have a lot of markets. They have other ways of selling cigarettes. But the conversation in the boardroom must be changing about, or I'm guessing that, they're going to have to find new ways to reinvent themselves. Are e-cigarettes a way to go? Are there other markets that they're thinking about?
Sure, there's a lot of new activity going in next gen. Each of the three big U.S. tobacco manufacturers now has a presence in the e-cigarette category. Lorillard really was early out of the gate there with the acquisition of Blue, but both Reynolds American and Altria are both making inroads in that market as well. That's specific to the U.S., but if you look more globally, heat not burned products and dissolvable tobacco, I think all of these companies recognize that diversification is necessary.
Vivian Azer at Citi, thanks for joining us tonight.
Thanks for having me.
You bet.